So I want to thank everyone. I actually met Mike years ago when I was looking for a job, and I wasn't good enough, but so I'm glad to be back. I've also kind of trooped through forest carbon and red domain through the years. I actually started my career working for the World Wildlife Fund in the East and Southern Africa program. I was part of the early wave in the early 90s working on integrated conservation and development projects and community-based natural resource management. So really, in many ways, the predecessor in thinking to a lot of these initiatives. I then did graduate work. I'm a forester. I own steel-toe boots. I've marked trees for felling. And it was, yeah, there's ways you can engage in sustainable forestry. And did my doctoral work across the bay at Berkeley on watershed management and ecosystem services. And had an aha in that period that if we didn't engage with big business, we were unlikely to succeed with lots of just small-scale projects that we need to figure out. And I swear, you're going to see a few slides that look familiar. We did not coordinate. I've never met Martin before today. And unless there was some subliminal coordination, maybe I'm trying to kind of suggest a PowerPoint open source Linux thing here. You'll see some, that's a previous life. So, and I should also say that I went to this fabulous Earth Day event 2 days ago where they closed the session. A woman named Nina Wise, who I'd never seen, she's a Bay Area woman, and she did a incredibly substantive, content-rich, kind of summation of the whole day's event while doing an interpretive dance. It was unbelievable. Okay, so I'm just gonna pace a little randomly. If Ellen DeGeneres calls me, I will, because she always has people dance on her show, then I will go call Nina Wise and figure out how to do substance and dance at the same time. Until then, you'll just get pacing. So I work now with BSR, very much engaging with companies like Puma, others that are starting to think about their impacts on biodiversity, ecosystem services, natural capital. And I'm going to give you a little bit of a different frame about why companies should engage. Because I actually think that in many ways, as an ecologist, you realize understanding impact is all about your framing. Are you looking at impacts only in this room, in this watershed, and only on this day, in this month? Or are you going to expand your scope to understand impact across time and across space? Because things move around. Okay, so do I have the clicker? And let's see. All right. So in many ways, at BSR, in looking at these issues, we look at them as staying ahead of the curve. This is about doing what business has always done, which is looking over the horizon and asking what's coming. What's coming in terms of consumer expectations? What's coming in terms of investor questions? What's coming in terms of broader stakeholder demands, requests, however they might, what's coming? How's it going to affect my business, my brand, my supply chain, everything in my business? And I just want to step kind of back. This is the two set of stats that was on the invitation that's online at Wildlife Works. And some images sourced off photos.com. And when I was sitting and thinking about what I would say, what struck me was, in many ways, what you do with that. And so many people have told me, Sissel, never, ever, ever start with these kind of images. That is what we have now. There are lots and lots of images like this. And we need to look unflinchingly and say, there's some stuff that just doesn't look, my mother would look at this and say, that doesn't look like a good idea. How do we think about this? And so I want to just focus more on this. So, this can be your initial response. We're hoping that, as the day's gone on, this has been a little more contemplative response. And then, of course, you need free and prior informed consent if you're going to engage in the all written documents in place, please. The mother's saying, has there been free and prior informed consent here? But we're hoping that you're going to see the pathway. This is actually a pathway to some of the actually incredibly fun. I've worked at so many organizations that are working on different sides of this debate. Incredibly fun, interesting, serious-minded people that are really recognize that they're at the forefront of carving a new future, which is one of the funnest places to be. So at BSR, for the past few years, we've been working on, we're a 20-year-old organization working on sustainable business. We've been working on biodiversity and ecosystem services and natural capital issues since 2007. And most recently, in the past year, we've been looking ahead to help companies that we work with try to figure out how to make sense of all the little dots that they see on their radar screens. Do they connect? Do they add up to anything? What do I make of them? What do I tell higher ups in the company about what we should do and how I interpret them? And so I want to just take a step back. What's the current state of play that informs the bigger REDD discussion? And it's going to seem like a step back. We see natural capital and ecosystem services, which is a subset. Oh, that was me. So as a concept that is coming of age now. And it's an analytical framework that's actually becoming part of international best practice to start to measure and understand your impacts on biodiversity and ecosystem services. This is shocking to many, many people in companies. This feels like the ultimate in scope explosion of CSR, corporate social responsibility, and sustainable business. Where is this coming from? And what we say is, like, look, this is not new. You had Gretchen Daly down the road at Stanford University in 1997 that edited a volume called Nature Services that was assembling a number of the thought leaders saying, look, we have been bounding our way that we think about our assessment of ecological parameters way too tightly. We need to think about it more broadly in terms of structure, function, and flow of services from ecological systems. And the Millennium Ecosystem Assessment was put out in 2005 by WRI, working with 1,291 scientists from around the world, basically saying most of the ecosystems upon which we rely are headed in the wrong direction. It was like between 60 and 70%. In 2010, another entity vying for the worst acronym, the Economics for Ecosystems, oh, there it is, the Economics for Ecosystems and Biodiversity came out with a report starting to place values on biodiversity and ecosystem services. The Intergovernmental Panel on Biodiversity Ecosystem Services now exists, is functioning. It's trying to be a successful sister to IPCC. What was very interesting and what our friends in many companies link to this, of the coming of age of a lot of these ideas, was that in January 2012, the World Bank's International Finance Corporation, in a small, very unheralded move, included ecosystem services impacts in their due diligence practices for making loans. What is relevant about what seems like a very arcane addition is that triggered the inclusion of understanding ecosystem services impacts in the due diligence practices of all the banks that have underwritten the Equator Principles, which are 77 of the leading banks with 2 affiliate partners, so a total of 79. These are common household name banks. These are city banks. They now how much they weigh concerns around certain impacts on ecosystem services amidst the many other concerns that they include in due diligence. That, of course, that's a question. That they're looking at it at all is, 1, noteworthy. 2, is exactly what a number of companies have calibrated when they talk about international best practice, and they're going to adhere to it, that they're going to adhere to these 2 things. So all of a sudden, as of January 2012, you have companies that are publicly on the record of saying that they will be starting to understand all the things that are tagged in IFC and Equator Principles, which include now biodiversity and ecosystem services. How are we going to measure it? What are the standards? What are the processes? Nobody knows. One of the few domains that has experience and understanding of looking at functioning ecosystems is REDD. And how do you measure it? So this is just summing up, and again, the slide deck will be available if anybody wants it. Financial institutions are starting to name in due diligence ecosystem services. IFC Equator Banks. Dow Jones Sustainability Index now looks at ecosystem services impacts for the forestry sector and is likely to look at it for other sectors. Public agencies, and we have this document in a BSR report we put out a couple weeks ago, in over 16 countries around the world are investing in ecosystem services work, and they may have convened a task force. They may have done more substantive work around developing specific policies, but they're actually engaging in less kind of issue by issue and more structure and function oriented approaches to environmental policy. Stakeholders are beginning to expect more of companies. You've seen quite a few NGOs in this room that are starting to, again, put together initiatives, and there's some of the countries listed, that are much more robust, much more integrated than early initiatives around environmental and social projects and applications. We put out a report that got a fair amount of play. It was interesting. 35 companies now name ecosystem services in their own publicly available materials. The Corporate Eco Forum put out a similar report. They bounded their analysis a little more broadly, looking at biodiversity and other things. We just looked at ecosystem services, thinking that is arcane enough. So if you're naming that, you have a very deliberate strategy around naming that. And it's interesting, and this was across industries, 35 companies. So what's the activity underway? What's really the takeaway here is it's starting to be everywhere. In the public sector, around the world. In the private sector, across investors, through companies, corporate policy. You have companies like Rio Tinto, Disney that have net positive impact on ecosystems in their corporate policies. What does that mean? How are they going to do it? And then you have quite a few. The NGO sector shouldn't be so small, but my cogs, my cogs were small in kind of the fit imagery, and I figured you'd roll with me on that one. So what's happening here? Again, what's the takeaway? What do you make of this? Well, it's actually very simple. This is evolution of corporate performance measures. And I used to say corporate environmental performance. And one of the representatives from one of the companies we worked with for years would correct me and say, no, it's corporate performance. It's no longer enough for companies to just select in a report, a sustainability report or another report, just a bunch of random measures that they feel are relevant. The GRI brought about kind of a formalization, a standardization, and now you have refinements and additions to the Carbon Disclosure Project, and again, should you be engaging in this domain. But what we're moving towards, and the ball to keep your eye on if you're looking beyond the horizon, is a broadening focus on both discrete usage or impact indicators, and I'll break down what this means in a moment, and overall demand for those very same, in this case, environmental parameters and availability. So what does that mean? So right now, what companies do is they look one issue at a time and they present a series of graphs or numbers, right? So the focus is on the downward direction of single indicators. My carbon emissions, headed down. My water usage, headed down. My human rights violations, etc. And you get the graphs and you say, but in many ways, again, think about this from a .com stance, right? So where in the early days of the internet boom, people said, hey, it's all about eyeballs on my page. That's all you should focus on. One parameter, and mine's going up, up, up. And eventually, investors said, you know what? I want a different graph. I want one talking about profits and costs and revenues. I need context. I don't want to just hear about your water usage going down. I want to understand your water usage relative to total water demand in that basin, relative to availability as a function of the recharge rates for recharging the underground aquifer in this, oh, by the way, probably very arid way, with climate change. Projected out even 10 years. Oh, and starting to look a little risky. That's where we're going. And again, what is astonishing, now, anybody in any company would look at that, and they do, and we work with companies every day, and they say, that is total and utter scope explosion. I can't gather that data. That's, I can barely get a handle on all sorts of supply chain impacts. And increasingly, again, we then flip back and we say, well, you know what? You're looking at a number of public agencies in these countries that are starting to ask these questions. And companies say that's true. And they'll quietly share examples of when we bid on this or that, we were asked these questions. The level of sophistication, the fact among players across domains is getting much more and leading us into this. We want to understand context. No corporate decision maker would look at an individual data point absent context. I don't want to just understand my market penetration. I want us to understand my market share relative to, if I'm Puma, Nike, and Adidas. So this is the takeaway point, if you only want to pay attention to one slide. If your company's issue-specific impacts are going down, but total demand is going up and availability is going down, then questions will be asked, including about risk and strategies to manage risk. Now there's I think the best example of this is the example of Coca-Cola in Kerala, and a number of you may know this example, but very quickly I'll just say that Coca-Cola cited a number of years ago their bottling plant in Kerala, India, which was a surprise to a number of us that knew that Kerala is an arid area. And with quite a few subsistence agriculturalists. And needless to say, what happened, and also recharge of their underground aquifers, which shall we say is unsatisfactory to all parties involved. Coca-Cola ended up with a stranded asset. A number of people read that case as, you know, stakeholder concerns, issues, loggerheads. That was the first case of a major corporate stranded asset as a function of not having included examination of natural capital, ecosystem services issues in their due diligence practices. They could have asked a handful of additional questions around additional total demand and availability and would have never cited their facility there. So we've done a fair amount of work also at BSR, and we have a report on this, looking at scenarios of uptake of ecosystem services in the future. Now these are, it was pointed out to me, North American, which I realized we generated this following on an extensive research process and then an event that was hosted by Disney and was close to the Everglades. So these were inspired by our Everglades field trip. But let me just very quickly say, what are scenarios for the future vis-a-vis uptake of ecosystem services and how it could affect companies? One is what we were calling Eagle Flight, in which activists and people developing different iPhone apps get a lot more sophisticated in thinking about multi-issue interfaces. And rather than just a barcode saying, oh, you know, carcinogenic, don't buy this, it would say carcinogenic plus they're using packaging, say, from primary force XYZ, really don't buy this, right? So could be very fast-moving campaigns, boycotts, government action driven by climate change, and again, we roll all this out in our report. I'm getting the signals. So, but the point is, this is the moment in time where, as a company, you are doing exactly what you don't want to be doing, which you are trying to run after burning platforms before they ignite, and you can't get ahead of it. So that's basically the take-home. And again, we should say that these insights and scenarios very much were based on a year of research, many individual interviews, surveys, and then engagement with thought leaders. We did say also and notice in a second scenario that it was quite possible that concern around broader ecosystem services issues might continue to crawl along. There might be a raccoon crawl, and there's no consensus in the NGO community and no real ability to drive real action. There's a third scenario, and in many ways this is, again, what I think many of us are talking about, and what we call the egret flight, which is that companies join in the ring, and they roll up their sleeves, and they say, it appears that there's a growing interest to understand my impacts in a range of different ways, and it appears that we are hitting certain boundaries in certain areas, particularly vis-a-vis water, of which forests play an important role in terms of maintaining, and it appears that I have a lot of good capabilities to understand my impacts, and there's a number of players that have increasing set of tools, like have developed in the REDD network, and should we combine those, we could actually together figure out ways to understand and then engage our impacts, and then engage in the mitigation hierarchy, try to avoid, mitigate, offset, and even engage in restoring and maintaining over time. So I'll just say, and this is like all part of a bigger set of insights. So the way to think about REDD in many ways, if you're building the business case from why do I care? Well, there's increasing scrutiny on natural capital ecosystem services. REDD Plus offers a learning lab on natural capital, on measuring and managing natural capital and ecosystem services. And And it's very well built out with a lot of safeguards and a lot of very sober-minded people that are working on this for over 20 years. When I was at Forest Trends, we were commissioned to do a report on the lessons of the first 20 years of REDD, which is available on the Forest Trends website, many of which were quite sober, the lessons. But the point is, there's over 20 years of lessons in this domain. There's a fair amount to learn, unlike almost any other domain, around measuring and managing impacts. So let me just end with our friend Peter Drucker, who's always a good person to end with, an old but good quote, talking about, we're in an era of change. And I think Martin's talk was very much akin to this, that things are moving quickly. One can't manage it, one definitively can't own it, but one can try to stay ahead of it. Can you just continue to override? What's really interesting, this is a quote from the CEO of Eskom, which is the utilities company in South Africa. It's a great article from Strategy and Business. And he said, and I should say that the company voluntarily integrated before it was clear that apartheid would fall. And he said, the advantage of being ahead of the game is not that you can dictate the terms of legislation, but you can influence the thinking around the issues based on the experience you already have. This is the opportunity of engaging now. So what does REDD offer? It offers very much a way for companies to stay ahead of the broader curve around how thinking is emerging around sustainability, environmental issues more broadly, environmental and social. It enables companies to invest in green infrastructure, which was a very little known and discussed term until Hurricane Sandy, and then in the States, it's interesting, almost every single proposition of what to do in New York after Hurricane Sandy included reference to green infrastructure. And in part, this was because there was a portion of the New Jersey shoreline that had made some investments that did fare better. So there actually was a case point A right there. And it's not only for reputation and brand, but rather to show investors and other stakeholders that a company understands its impacts on natural capital, and it's trying to understand this, trying to understand ways to measure them, which again, REDD offers pretty uniquely. It's trying to understand its environmental losses, a la what Puma's been trying to do. It's trying to provide evidence that risk mitigation is underway by investing in green infrastructure that can maintain the structure, function, and flow of services, as well as part of that structure, the biodiversity in place, social elements. And also the companies are trying to explore whether investments in environmental assets could be a pathway for moving losses potentially off balance sheets, because otherwise, how are you going to do that over time? So next one. Unlike most other investment classes that relate right now, of which there are a few, in this broader green infrastructure, natural capital, ecosystem services domain, REDD offers decades of experience, really robust tested project screening criteria that you've heard about from other people's, tested safeguards, and a well-developed institutional landscape of seeking and supporting private sector engagement. This is incredibly important. Right now, we're at a point in time where, as Jared very evocatively said, he said, I faced a bunch of protesters that were talking about how they didn't want REDD. And yet you have the opportunity in engaging with REDD to literally and figuratively hold hands with many NGOs that will definitively say, we have your back. We're going to work on this together. And that is a pretty unparalleled opportunity. Again, and I want to reiterate what was said earlier. If you had odds that were as good as you have in the domain of REDD for other things, most companies would engage. The only reason engagement has not happened to date is a lot of these issues have felt peripheral. What's really interesting is when you broaden your scope to look at issues around the growing set of queries around natural capital, biodiversity, and ecosystem services, you start to see that this is actually becoming very core and material to business. This is now something that's discussed in banks and increasingly in public sector players around the world. The opportunity now is just to get ahead and stay ahead of the curve. So with that, I want to thank everybody.